Good morning. What the? It's Friday. Woo, 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 woo. If you guys know that song from The Cure. I mean, I'm old. The Cure in the 80s was the thing. I wasn't, kind of that emo dude, but I like their songs. Well, I like some of their songs, not all of them. I wasn't a huge Robert Smith fan. But anyway, it's Friday. I'm in love with stocks, with whatever. But here's the thing. I go away for 3 days, and you effing degenerates kill my entire portfolio. I come back. There's an enormous swing yesterday in stocks. Enormous swing. I had a 4 to 5% swing between the low of my portfolio yesterday to the high of my portfolio. That shouldn't happen. Not in a portfolio my size with the amount of diversity that I have. It shouldn't happen. It's crazy. And how do you tell that volatility? You look at the VIX. It's plain and simple. I said, I think the VIX is going to 20. Yesterday, it was down 5%. It's down at 1752. Does that mean we're out of this? No, it does not. It just means that we've got some volatility going on. And you don't want to change every day. If I were balancing my portfolio every day, oh my freaking God, I'd go nuts. I wouldn't have time to do this podcast. I wouldn't have time to sleep. But so you want to make sure that your plan is correct. You want to make sure that your long-term goals are set. Set a number, okay? Understand. Put a timeline in when you want to get to that number. Then you've got your goals set for yourself. Stock trading isn't hard. It's just about making sure that you have a plan. You're able to get to that plan, and maybe there's changes along the way. There will be. But, the VIX, this is going to tell us where the market's going. I don't even see the full button hook at this point. It's not there. So, we can talk about the Qs. Yesterday, if we're looking at a 5-minute, and I'm going to do this. I'm just going to look at a 5-minute chart of yesterday, okay? This is where we started. This is 9 o'clock right here, 9:30. It's a 5-minute chart. So 9:30 right here is where we started, about 462. We went down to 455, okay? We went all the way back up to 468. Then we came back down again. And the selling and the close, and what you're seeing, the steep sell-off here, most likely that's Google. There was news yesterday. That's the sell-off that we saw. Have we changed in the 4-hour? No. And I pointed this out yesterday. I said, and I highlighted a little bit in the newsletter. If you want the newsletter, by the way, it is free, 100% free. It's right here, dailystockpick.substack.com. You can get to that and everything on my link tree. If you're watching the video, the link is down below, linktr.ee/dailystockpick. You got your link to Trendspider. And remember, Trendspider, I put it in the newsletter yesterday. I may not have made it very clear. Trendspider is not just about when to buy. It's when to sell and when to get out. And you have to, it takes emotion out of the thing. You still have emotion when you actually press the sell button. But the reality is, if you're looking at these charts and you're saying there's weakness and the algorithm has you out, it might be time to pull out. And that's just an individual. If you're losing sleep over that, you've got to. And so what do I see in this chart? Well, I see last year from all the way from, September, we may just be going into this a little bit early. And you may just be seeing a little bit of an early thing. So here, this is from July of last year all the way to November. What do you see? We keep going down. We have lower lows, okay? The algorithm keeps getting you in at a lower price. We also have lower highs. The algorithm keeps getting you out, but it's getting you out with smaller and smaller. And then what happened in October, we hit. November, it was the start of a bull rally, okay? Start of a bull rally. Now, what are we seeing? Here in June, we start to see it go up. And then in July, we start to see a little fall, okay? July with 100% win rate, it's going to take that out. This isn't going to be the year that it was good. For the first couple of weeks, we were doing really well in the Qs. But again, when you hit that midpoint in July, it just fell apart. And so now we're seeing what we should have been seeing in August. We're seeing it in July. So what do we do from here? Well, the Fed's preferred inflation gauge, core PCE, rises 0.2 as expected. So the Fed just got news that the inflation numbers, they're in line. Now it's not down to 2%, but we're seeing everything move in the right direction. What does that mean? Maybe the Fed, which meets next week, maybe the Fed surprises us. Maybe they make a move in July. Will that be good? Well, it's good for IWM. IWM is going to be the small cap and the small and mid cap. That is the gauge of small and mid caps. It's at 220. I said it down here when the algorithm got you in at 200. I was a little bit skeptical, but I said that the actual resistance is going to be 212. So old resistance turns into new support. And so if you're buying here at 220, you don't want to sit there and wait for it to go through 212. If it's a short-term play, if this is a long-term play and you want to buy it long-term, again, I think we have more room to run. Tom Lee thinks it's up at 300 by the end of the year. So this is it. And if you don't want the small caps, go over here to market data in Seeking Alpha. And you can look at small cap is IJR, micro cap is IWC, mid cap MDY. So you can find all of these things on Seeking Alpha. Again, the tools that I have, Trendspider is not just a way to actually find out when to buy. It's also a way to manage your portfolio with that 4-hour algorithm. It takes emotion out of it. That was my point yesterday. But will the Fed surprise us? My guess, and this is just a guess, nobody knows, but my guess is that Jerome Powell will probably not lower rates in July, but he will heavily signal that he is going to lower rates in September. That lower in September is already priced in. I don't think he's seen a huge, we're seeing weakening consumer. You saw it in the airlines. You saw it in Delta. You're seeing it in consumer goods. You're seeing the weakening of the consumer. So the danger is the Fed waits too long, and they waited too long to raise, and they went into that hyperbolic kind of raise. So Jerome Powell may be thinking, I don't want to wait too long, and maybe September is too long. Maybe I'll go in July. Maybe. Again, the Qs are getting killed, but the Qs shouldn't be tied to that Fed rate cut. They're the largest stocks in this market. So that's something to think about as you're going into this. I am trying to get more exposure to IWM and the small and mid cap space because I do agree with Tom Lee that those have room to run. I just don't want to overpay for it because in my mind, that's a short-term play. My portfolio is big cap tech. It's not changing. And I will live and die by that. I may die by it, but that is my portfolio. So I'm not changing that. Now, I think it was last week I posted the CNN Fear and Greed Index was up at greed. It was well into greed. Well, where did we go? We're at fear now. We're at fear. And so the quote that I will point out to you is Warren Buffett that says, when people are greedy, be fearful. When they're fearful, be greedy. Start buying. If you're looking at long term, it's time to start buying. And you want to buy on the upswing. So it's not like you buy on a Friday. You don't want to do that. If you're dollar cost averaging over a long period, buying on Friday is perfectly fine. But if you're just looking at money sitting in your account and it's cash and you want to deploy it, do not buy on a Friday. Wait until Monday. And so the fact that we moved to that fear index so quickly, that tells me that this one probably has the 200-day sitting there. Now, if you look at the daily, which is what a lot of quants and stuff do, the 200-day is still in play. We broke down through the 200-day yesterday, and or the 50-day, and we never got back above it. There's weakness. There is weakness in the Qs. That's it. So, again, you want to look at that. Now, one that I pointed out yesterday, VKTX, Viking Therapeutics. This went nuts yesterday. And what I want to do, I want to point out in the 4-hour that we saw a buy here at 65. You're trading at 64. I don't know that I'd necessarily look at, oh my God, I've got to get into this one. But I wanted to point out a 5-minute chart because yesterday I said in pre-market when it was trading at 53 that you still had more room to run on this one. Now, I didn't trade it. I didn't buy it. I said I'm not a biotech guy. I'm not a super fan of this. But when we looked at this in Seeking Alpha, VKTX, when we looked at this and we said Wall Street has a strong buy on this one. The valuation's not crazy, but understand they are not making money. There are 12 analysts that view this. 12 analysts. And when you look at the revisions of those 12 analysts, 7 have the earnings per share going up, 2 going down. Okay, nobody's touched the revenue because there is no revenue in this, but this is a GLP-1 company. And so what I want to point out to you is there was a big gap up yesterday, a big gap when you look at this daily. We have a big gap. Well, it started to come back here down to this 39. It didn't. It got to this 64. So it didn't quite cover this gap, but you've got this gap that's covered up here at 88. I do think that this one has more room to run. Just showing you there are opportunities in this market. Now, I also talked about how OpenAI and Google and AI will be a problem for Google. Google's bread and butter is in search. And so when OpenAI yesterday announced they're going to do an AI-powered search, Google slipped 2%. And that's what you saw in the Qs. If you want to see how this one reacted, go and look at a 5-minute chart. And it's still down today. It's still, it closed down yesterday. But if you look at this 5-minute chart, tell me where they announced. Because I'll show you right here, right at 1400, right at 2 o'clock, they announced it, boom, down. And it came down to its lows of the day. This is one, I will add to this one when it's time. It's not time right now. It's just not time. If you're buying this one, you're buying into weakness. It's not a horrible time to buy if you're looking for long term. I'd look at the 200-day right at 167 as that support level. That's what I would do. But your Bollinger Bands are wide open, and you're on the downside of the 9-day. There's no reason to rush into this one and buy it. You wait until you have some strength to buy this stuff. Okay? CrowdStrike. CrowdStrike has some believers in it. Let me open up this. CrowdStrike, Bank of America, says buy it. This was July 25th. This was yesterday morning, 1041. Bank of America buy rating. Bank of America did lower its price target from 400 to 365. That's still a really good price target. These are experts who are doing this. Has it found a bottom? Again, it's still got weakness. I would much rather see you buy this at 270 when it's in an upward trend, then buy this at 250. You're not going to time this. Yes, the MACD is way down here. Yes, it's going to cross up. Yes, the RSI is at 16, the lowest it's been in a long, long time. But you want to wait until you have strength. I bought it. I tried to time the algorithm. I was wrong. The algorithm got you out with 9%. That was a great play. Buying here at 344 and getting out at 9%. Did it know that they were going to shut down the world? No. But the algorithm does play in that middle space. Now, you might be saying, Gary, you talk about this algorithm. How do I get the algorithm? You go over to Linktree, linktr.ee/daily stock pick. And that top link is Trendspider. It will take you over here. Okay, it's $53 a month. In my mind, I'm not worried about $53 a month. Make sure your portfolio can sustain this. If you got $5,000 in a portfolio, the algorithm makes no sense. You're not trading enough to actually use the algorithm. If you've got 50,000, I would question even that. If you got 100,000 or more that you're actually managing, I think this makes total sense because again, the algorithm takes emotion out of it. Now, did I sell up here at 9%? No. My goals on CrowdStrike are different than most. I own a ton of Palo Alto networks. Did I sell up here? No. But I bought more at 305. Now, I'm not happy that I bought it at 305, but in the long run, I think I'll be okay. I will buy again during strength. I won't buy during weakness. That's just it. Now, this is no news. This is kind of clickbait headline. Apple to adopt AI protection set forth by Biden administration. This means nothing. That means nothing to Apple. That's not going to move the needle. I mean, that's just, hey, Apple's going to, abide by some unknown kind of thing that could be turned around because it's an administration. Don't even pay attention to it. What you do want to pay attention to is Apple Preview. Bears get lucky for another iPhone lesson. iPhone sales will drive this company. And if, again, we're talking if. These are earnings that are coming up. I think on Apple, it's coming up next week. Let's see. Apple it might be 2 weeks from now. Apple is, no, it's a little while. Yeah, it is August 1st. So it is next week. August 1st, Apple reports. They're trading currently at $219. This article basically points out that iPhones will drive this market. And if Apple is going to make another move to $250, which I do think that Apple has in it. I think that Apple has it in. Now, here's the problem. With the current valuation and the current growth, it should not even be trading at $217. This thing should be a $220 stock. With the growth and stuff, its current price, Wall Street price target is $223. I would argue that if they don't come in to a good thing, you're going to see this one 10% down. You're going to see it hold that 200 level. I think anything under 200, you just rip roaring buy into this, because that Apple iPhone is going to be the driver of this thing. And now, Apple AI, we still don't have a really good look into this, what it actually is. I just assume that Apple is going to, Siri has gotten tremendously better. But if they report something where they don't have revenue growth, because remember, revenue year over year has gone down with Apple, and that's why they're being held back from 250. If they show growth, I think that's enough, and I think that will push them up to 230. Okay, if they then forecast out, hey, we're going to see a huge iPhone cycle where people start buying, I think that's where it gets to 240. And then your trading frenzy gets it to 250. So that's the plan that I have. Am I trimming this? No. I mean, again, I'm not trimming into weakness. Did I get out here at 228? No. I might trim some in my retirement account just to get the mindset that it's okay to sell. I have thousands of shares of this. If I sell one or two shares, it's not going to create a huge dent. But I do want to get my mindset into the fact that I can sell this before earnings. If I make a mistake, I just buy higher. It's one of those stocks that I don't mind. Look at that 50-day. That 50-day with that golden cross. The golden cross, it was happening when it was trading in 190. Did you buy it? Should have. Again, it's coming back. I think your support level is 200. If it gets down below that, I think the valuation actually means you go ahead and buy it. Now, maybe you don't want to buy that one. Let's look at this one. Trade ideas, the top 5 stocks for big tech pullback. This is interesting. To me, this one makes sense. I mean, Steve Kress from the quant team, he goes over a ton of stocks. I'll give you the first one. The first one is GSL. I don't even know what the hell it is. But again, these are 5 stocks I never heard about. And he's giving you the top 5 value stocks. He's going over value. Remember, in the rising interest rate stuff, when they actually start to reduce, then value actually becomes more attractive. So it's a PE at a 40% discount to the growth index. He's taking his fundamental knowledge and he's giving you 5 trade ideas that use the quant in order to get, and the quant has outperformed tremendously since it was implemented in Seeking Alpha. So if you're interested in those top 5 tech ideas, I think that's a good one. And this one's interesting too. Uncovering the dozen Spirit Airlines HubSpot. This is a weekly newsletter that comes out from the Undercover Dozen. And they give you 12 ideas published every week on stocks that have less coverage on Seeking Alpha. And they go over, would they buy them? Would they sell them? Blah, blah, blah. I like this. I like this newsletter. So again, if you want this, you go to the link tree. It's right here, the second link. You get $25 off, but you get a free 7-day trial. So if you like again, go read my newsletter, click on the article. If it asks you to join, just use my link, join up. It's that simple, and you save $25. I do think that there are great ideas out there. 5 value stocks and all of the undercover stocks. That's it. Now, yesterday, I said it at the end of the day when we were going, at the end of the podcast. If you missed it, I said 3M is a good buy. I said, and I used Earnings Hub. I went over here and I said the 3M. We can point it out actually in the newsletter. I put it in the newsletter. So let's just read yesterday's newsletter because I put it in there and it was, did I make a trade? No. I mean, sometimes I just don't trust myself. And I'm so far in the weeds here. But 3M might be interesting tomorrow based on the expectations being low. It's a beaten down stock with new management. I thought it was a good play, and I went into depth on that one. Now, I said the algorithm had you in at 104. It's trading at 111 right now. And they did really, really well. Q2 swung to a net income of $1.15 billion or $2.07 a share from a loss of $6.84 billion or $12.35 a share. Again, that's a loss to a gain. This one has more room to run. It's now up 7% in pre-market. It's good. It's a good stock. It is on the rise. When we take a look at this one from a long-term standpoint, you want to take a look at that weekly. It is upper left to bottom right, but new management. That changes the play. And when new management comes in and you start to see the confirmation above the 9-day here, and that the 200-day is still moving negative, but that 50-day is starting to move positive. And I would argue that the actual valuation of this company is not bad. Now, their old management, there were some ethical dilemmas. They had some earplug stuff that with the military and stuff like that. But the valuation is really good. Now, if this guy can turn the growth around, then I think you've got a fantastic, fantastic company. On the rebound, you could be looking at 10, 15% even from here. Because if we just get to the 200-day, just to the 200-day, you're at 138. Now, it's going to continue to fall. So maybe that 131, which was the previous where it popped up to 131, maybe that's the next thing. Your next resistance is 111, but you're trading over that today. My guess is that that's where it stops today, but your next resistance up above that is 130. So I think this one's probably a pretty good play on that one. Now, one earnings that I know my dad owns, I begged him to get out of this one. We're not out of it. It's down 36% is Dexcom. This is the glucose monitor company. They now see Q3 revenue at $975 million versus $1 billion versus a consensus of 1.15. They are bringing it down. They missed and they brought it down. And the stock is beaten down by 40%. Okay? 40%. This is a company that is actually making a lot of money. Their margins are good. Everything is good in this company. But they missed and they brought their expectations down. Now, the valuation, a little bit stretched. We can go and look at it. The PE 61, the sector median is 20. But when you look at the PEG, it was only at 0.6. Okay, it was well below the sector median. Now, the PEG forward, a little bit high, so maybe it was trading a little bit. But when you look at that growth, they were growing 25%. They are not going to grow at that. So that's the issue. So if you you lower your expectations, and look, this has been in a slide since the last earnings. I mean, this shouldn't be a shock that it's down. It should be a shock that it's down this low, because if we go to a weekly chart, where are you pulling back to? You're now down at $67. That's where it was in 2022 at the lows. Is it a buy? I don't know. I mean, glucose monitoring. Again, I don't know about this sector real well. But I just thought it was down. I thought it was interesting, and I thought it was a pretty good. I need to get my dad out of that one, but I'm not going to sell into weakness. I'm going to wait. Any reaction in the market is an overreaction. So, Bitcoin 2024. Trump is set to speak on Bitcoin at the Bitcoin conference in Nashville on Sunday. Here's the thing, and one thing Donald Trump loves is if he's in the news. It was well reported that he would watch cable news while he was in the White House and then balk about how much coverage he had in the news. He loves to be in the news. Who's in the news right now? It's Kamala Harris. Kamala Harris raised a ton of money. Kamala Harris has a lot of excitement around her to the point where it's pretty much even in the polls right now. Again, Trump got the assassination bump where nobody thought he could lose. Now Kamala's getting this crazy hype. Now, I'm not a Kamala fan. I am super pissed off at the Democratic Party because they chose their elector versus actually being elected and nominated. I am super pissed off. But I have my issues with Trump. But this isn't about the politics of the situation. This is about Trump wanting to be in the news. He's going to make some statement at this Bitcoin conference. How do you want to play it? I've got MicroStrategy, MSTR. I own this one at about $1,600. It's now trading at $16.88. It has gone, you can see, bounced up and down. We've traded sideways, all the way sideways since March, and we haven't necessarily gone up. That was after this big run from 461. This made you 240% in this stock. Now, I consider this a leveraged ETF on Bitcoin, because all Michael Saylor does is he takes out loans for 4 or 5%, and then he buys more Bitcoin. And he says, hey, I'm just going to buy more Bitcoin. You can also play IBIT. Again, IBIT is trading under that 200-day. We finally have a 200-day on this one. The 50-day starting to move positive. So for the long term, I'm in this. For the short term, I think you can look at this catalyst as a potential to get into Bitcoin and maybe make some money by Monday. Now, if you just want to trade Bitcoin, just open up a Coinbase account and just go in there and buy Bitcoin. I don't like owning Bitcoin. I don't know, call me a boomer. It just makes me feel uncomfortable to open up a Coinbase account, and pay fees. I'd rather just buy the ETF. It tracks Bitcoin. And it so far has proven that it will track Bitcoin to a T. So I don't want to house the Bitcoin. I don't want to do it. Now, once somebody gets, hacked, one of these ETFs gets hacked, you could be, calling into question whether they own the amount of Bitcoin or not. It could have ramifications on that. But I look at IBIT. It's one of the biggest market caps. They do actually, if you want to buy Coinbase, you can buy Coinbase too, because that trades with crypto. Any of the crypto miners, I own Marathon Mining. You can do that one. You can do any of the other ones. But again, I would say here on a Friday, if you don't have exposure to Bitcoin, it might make sense to get it, because I do think he's going to try and get into the news. Now, Jeremy from Facebook. What is your take on an SMCI? I have a fairly large position that I got in at 782. Thanks for your input. So here's SMCI, and this is part of the tech wreck. And make no mistake, I've said that this one will trade sideways for quite a while, and I think it's going to trade sideways until next earnings, and that's August 6th. So this is going to be one of your first looks at Dell, at SMCI, at HPE. This is going to look at, okay, are we actually building out that infrastructure? We saw how Google spent a freaking fortune. Where's that money going? It's going to NVIDIA. It's going to AMD. It's going to SMCI. It's going to Dell. It's going to HPE. It's going to these companies. So what you have to look for is, okay, does the valuation make sense here? And so let's go look at SMCI with the valuation. SMCI it was a small cap. It's now in the S&P 500. I think it's even made its way into the NASDAQ, if I'm not mistaken. I don't exactly know. They keep getting added. Now, the valuation is a D, okay? It's got a 36 PE. That's super expensive. But with the growth, when you add in the growth, their PEG ratio is 0.61. That's under 1. That means it's a value stock. And so when you go and you look at the growth, they're growing 79% year over year. Now, that's tremendous. And that, at some point, becomes unsustainable. The sector's growing at 3%. You take a look at the profitability. This is where it really comes into play. If they don't have pricing power and they can't charge 16% gross profit margin, and they can't hold that, and then their growth goes down, this stock will get killed. Now, when we go and we look at the experts, 14 of them in the last 90 days have taken their revisions up on earnings per share. 11 have taken it up on revisions on revenue. Now, 2 of them took it down on revenue. So if we go and look at these ratings and we go and look at the Wall Street ratings, the average price target is 1,033. That's a 45% upside. 45%. Now, there are 17 analysts that cover this. One has it as a strong sale. Okay? When you look at this price target, they chased this price target up, but it didn't reach the top, and now you're starting to see it slide. When you see a stock go up like this, you've got to expect some volatility on the later side. Now, where have we traded? We've traded sideways since, say, April. Okay? Since April. That's not a long time. Look at how sideways this traded. This was a sideways trade last year from June until January. 6 months. So in my mind, I think we're just trading sideways. Do I see us coming down here to 400? If they don't keep the profit margin up, if they don't grow their revenue, and if they don't guide higher, you're going to see this come back down to 400. You're going to see it to where that move up there, they're going to say, well, it's unsustainable. It's just a rack company. It's nothing more than a rack company. And that's all they do. Now, they do have the best racks out there. It runs the most efficient NVIDIA chips when you install it. So, again, between this and Dell, I'm not putting, it's not my Apple size. It's not my Apple size. It's not even a top 5 holding. I think you'd be crazy to have this in your top 5 holding because, again, they have just gone through so much growth, and it's hard to keep up that growth. And so would I say trim? If you're in at 782, I'd probably trim it around, 750, 760 if it gets up there. That's a bad candle to have on this weekly candle, this week's candle. You've got a 9-day that's moving down. Now, the good news is that if you don't hold on to this, if you get above that 720 range today, it's trading right now at 715, market just open. If you get above that 720 range and this candle kind of gets a little, it won't get smaller because the low is 663. But if you get that candle up, you know what? Your Bollinger Bands are syncing up. Your MACD's going down. Your RSI is in no man's land, but it's on the downside of 47. That's pretty good for another move up. So in my mind, I'm not making a move. My average purchase price on this is somewhere in the neighborhood of 250, 260. I've got several lots of this. I've got one at 1,000 where I bought it at 1,000. I was just adding to it. Again, we talk about watering your grass and not your weeds. This is a grass. In my mind, this is a grass. But at this high height, with that crazy, crazy number and gain this year to date, that's hard to stomach for a lot of people. So they will start to take some profits. And that's just my thought on it. Do I think it's worth 782? I'm not adding to it. I'm not selling at it. But I do have a much lower average price target. So, Lisa Tone, what's your thoughts on SILV? I thought this was silver, but it's silver. SILV is Silvercrest Metals. We can go and look at it. Let's look at the chart. First, let's look at the chart and see what's happening. It is bottom left, upper right. Pretty good. Algorithm just got you out with an 8% gain. Here's the good news. If you have the 4-hour algorithm, it makes you 174%. Versus if you bought and held this for 24 months, you're up 56%, 3 times your money. Okay, your average win is 18%. You get 22 positions. So it's not like you're trading every day. This is once a month trade. That's it. I mean, every now and then you get a couple of buys within the month, but it's 22 freaking trades. Look at that gain of 65%. Again, the algorithm plays in this middle ground. It doesn't play extremes. It plays in that middle ground. Now, getting you out here, it's up 0.77. I would probably think that at some point in time, that MACD and the RSI, it will get you in before earnings. So that's going to be an interesting one. Before earnings, but I don't know enough about the company to tell you, oh yeah, you want to buy it before earnings. There are 8 analysts that cover it, okay, on Wall Street. 4 have a hold, 3 have a buy, and 1 has a strong buy. It's been a hold for a very long time. So they haven't changed their price target, but again, they just kind of do that. The actual price target has chased this down. So I'd be a little bit concerned about that one. Valuation, nothing wrong with it. The PE is at 10. It's probably a pretty good one. Your PEG ratio, 0.12. Your growth is an A+. They're growing at 147% year over year. Profitability, they have a 69% profit margin. That's great. Momentum, it's got all the momentum in the world. 3-month performance, you're up 6%. 6 months, you're up 59%. 9 months, you're up 81%. 1 year, you're up 56%. Your revisions, there's 1 down. 5 up, 1 down. On earnings per share, 1 up, 1 down on revenue. So it's an interesting one. I don't know, it says precious metals and minerals. Let's see what the description says. Engages in the acquiring, exploration, and development of precious metal properties in Mexico. The company primarily explores for silver and gold properties. It focuses on principal property, Las Chipas mine. So it's probably not a huge market cap. No, it's 1.35. So it's a small cap. This wouldn't fit my Lisa, it wouldn't fit my kind of investment style, so it would definitely be a trade for me. And if I'm trading something like this, I'm just using an algorithm. I'm just using the charts. I'm not worried necessarily about the fundamentals, but I would trade it. And there's a difference there. Not worrying about the fundamentals is different than not caring about the fundamentals. In order to trade a stock, I'd like the fundamentals to be there unless there is a major, major catalyst and major, major volatility, like a short squeeze. The valuation in a short squeeze makes no sense, but you can trade that and make money. So that's what you want to do. I think in this one, for me personally, I'm not into metals. I'm not into small caps. I'm not into that type of thing. But would I trade it? Yeah. I mean, it seems like a good trade. The algorithm makes you 174%. You win nearly 50%. It's a 45% win rate. So in my mind, I think that makes sense. But again, you do you. Your risk tolerance is your own. The weekly, I mean, the 50-day hasn't moved up on it yet. You might be getting that golden cross. This might be going for a little run. Again, the valuation is nuts. But the price of gold and the price of silver has to continue up. So that's just my mind. Scans. We've got one in the energy sector, rig. This is Transocean. These are guys that own just a bunch of ships that run shipping. You saw UPS just get killed on earnings. Rig is one that, you got a positive moving 200-day on the 4 hour. You got a positive moving 50-day. You're in at 517. You're up at 584. Now, the algorithm makes you 9% on this. It's not very good. Over 2 years, you make 105% if you buy and hold. And what does that mean? That means is you've got a stock that's kind of rebounding. And it definitely looks like it's playing between the 50-day and the 100-day. You can see right here, all the way since November of last year, that 50-day has provided the ceiling. So in my mind, again, is 583 a good price? I think your upside is capped. That's what I would say. And your earnings are coming up July 29th, so Monday. Might not be a bad risk. But we can go over here to Earnings Hub and we can look at rig. Let's look at rig. Because we do have earnings next week. I'll go over the earnings on Monday. I won't go over them on a Friday because I don't want you to buy on a Friday. We can see they lost 3 cents per share. They're expected to lose 10 cents per share. Now, they made $763 million. They're expected $862. So they're expected to make more revenue, but lose more money. And so that's going to be an issue for me. It's probably not one that I'm kind of taking a chance on. You got MongoDB. You got ELF. ELF has a cross up. We can look at ELF here in the algorithm. It looks like it's a buy. We can see the weekly on ELF still in an upward trend. 172, the valuation makes no sense, but your MACD is so low. Now, don't mistake this because, here at this 168, your MACD was about the same as it is today with a cross up. And that 168, sure, it went up to 182 at its high, but then it crashed right back down. The algorithm didn't act quick enough, again, because the algorithm uses moving averages. So the moving averages can't act quick enough, and you got this death cross. Now, did it kill you? No. Right off of 162, you could have held it and ran it all the way up to that 211. Now, would I expect that to happen with this one, where it's 172? Your earnings are coming up, I think they're next week, August 5th. August 5th is your earnings in this one. And look at that kind of range. This goes all the way back to the pandemic lows, the COVID lows. And then you have 2022 here where it just bottomed out, but then it took off. It's a cheap cosmetics company. So they've been basically taking Ulta's business away because ELF is just better. TikTok was that TikTok ban thing. That's what happened here where TikTok was banned and ELF's going to be out of business. No, it went right back up. So you got a double top here at 215. So if you buy at 176, you got to figure your top is 215. You got to figure your bottom is 150. That's where I would say play it. If you want to buy it, that's the way I would do it. IBM, Old Dominion Freight. Deere has a buy here. And Deere is an interesting one because this one's been trading sideways. I've said it before, and it's on the downside of that sideways. And so, we've had a couple of here. 0.77 gain. You could have made 1%, but you're trading under the 200-day. It's a company that I think, in my mind, you want to take a look at. If you're into industrials, Again, this is just a farming equipment thing. Their self-driving stuff is like, industry leading. But 1 year you're down 14%. It's an upper left to a bottom right in this. And why? Well, it's because of the growth. They're not growing. It's net minus 1%, but their profitability is so good. 34% profit margin. Now, people are just, they're doubting on the company. 0 have brought their earnings per share up, 17 down. 0 have brought the revenue up, 12 down. So it's a little bit, again, you have to take a look at these as far as the fundamentals and the chart. In my mind, if you're going to invest in anything, you got to know both. You got to know both. And remember, all of my tools are on Linktree, linktr.ee/daily stock pick. You can get Trendspider. You can get Seeking Alpha Premium. You can also get Alpha Picks. Say you don't want to, do all this work. Well, here's Alpha Picks. Okay. And the reason why I promote Alpha Picks is not because, oh my God, it's, they're geniuses. It's stocks I would never think to get into. Okay. And the performance is whenever you have a stock picking service, you need to have the performance with that portfolio. Not just some guy, picked one earnings call, sign up for my text alert. No, that's what Alpha Picks is. Alpha Picks tells you on the 1st and the 15th of every month what stock to buy. They also tell you, not on the 1st or 15th, they tell you when to sell. And that's the key. They will trim stocks. They will completely get out of stocks. They tell you what to buy and sell. Now, when you look at it, July 1st to July 24th, July 1st, 2022 to July 4th, 2024, they're up 132%. That is the portfolio. What's the S&P up? 46%. I'd be perfectly happy with VOO at 46%. But if you're dying to get into this, I will tell you, these are stocks that I don't even know. They picked SMCI in November 2022. I didn't know about it back then. They picked Abercrombie and Finch in October of 2022, I think. Some dates, my mind may be a little bit, but these guys have picked a ton of winners. And so if you don't want to do the research, or if you don't even know how to do the research, I think Alpha Picks at $449, I save you $50 off that. I think it's a great, great price. Okay, but again, you have to have a portfolio that you can make that money back. Because if you're just putting in $1,000, then, even at 132% over that 2 years, it doesn't make sense to buy Alpha Picks. Okay? Get Seeking Alpha Premium for something and look at the, try and trade on that. And at the worst, say you can't, get Webull. Webull's got the best, platform that I like to actually trade on mobile. That's it. And again, my newsletter, completely free. If you have a phone service and you want Visible, I save you $20 off your first month of service. And if you want AT&T at your house, I use Giga service. I love it. It's 1 gig. God, I was so happy to get back to my 1 gig. Oh, but yeah, and all of the social programs, they're all up here. There's Twitter, X, Vase, Vaz, Tomato, whatever. You got Spotify, you've got Apple Podcasts, you got Facebook, you got Instagram, you got YouTube. And if you made some money and you just want to say thank you and want to support me, one of two things. Pay for the newsletter, which actually gets you something in order to support me, or send me a Venmo, PayPal, or Cash App. They're all here. So if you have any questions, hit me up. Again, it's a Friday, so be careful out there. But I do think Bitcoin's probably the best bet for the weekend. And don't at me if all of a sudden we go down 20% on Bitcoin. Don't at me. Have a great weekend. See you. Bye.
Morning, I wake up to the sound of the trading bell. My heart starts to pound.